well and staying safe. We're going to continue our weekly discussion here on mortgages, interest rates, and the health of the market. And definitely want to stick around as there's a lot to cover. And I'm going to be talking a little bit about what you've probably been hearing in mass media or in your conversation with friends and family in terms of potentially an upcoming recession. It just seems like this conversation is on the tip of people's tongue. A lot of people are talking about this, and I definitely want to dive into that. Talk a little bit about oil prices, the job market in terms of what we're hearing from Canada, and home sales in Vancouver and in Toronto in particular. So definitely stick around for the full video. There's a lot of information to share. It seems like every week is an exciting week. As I always say, what a week has it been, the news that's come out. So any questions from me, any comments, please leave it below. You can follow me on Instagram and Twitter as well. The links or my Twitter and Instagram handle in the description below. And the articles will be there as well for your viewing and research purposes. Again, just a bit of disclaimer, I am a wealth management advisor. This is what I spend my day in, day out researching, spending a lot of time and effort. So this is not financial advice. This is a perspective of individuals who wrote these articles, and obviously my perspective as well. I always say work with someone you trust, someone that can be your advisor, and someone you can work with. But also very importantly, always do your own research. It's very vital that you are able to speak or at least gather some knowledge so you can have an intelligent conversation. So without a further ado, let's kick it off here. So this is an article from this week, July 5th, from the Canadian Press. Bank of Canada's rapid rate hikes likely to cause a recession, the study finds. So a little bit, I'm just going to go through some of the verbiage here. The Bank of Canada's strategy of rapidly increasing its key interest rate in an effort to tackle skyrocketing inflation will likely trigger a recession. And this is a new study that came on Tuesday by the Canadian Centre for Policy Alternatives. The study showed that in the last 60 years, the central bank has, in 3 cases, managed a 5.7% reduction in the inflation rate by quickly raising interest rates. And each case was followed by recession. And that data holds to be very true that, when inflation reaches above 5%, which is obviously in Canada 7.7% in the last print, the way to bring it down and usually what follows it is a recession. So, it is history or probability does follow that, so you definitely want to prepare. And that's why I really wanted to share this with you because obviously it's a very important topic. The Research Institute said if the central bank aims to bring inflation down from 7.7% to its 2% target by quickly raising rates, it could cause a significant collateral damage, including 850,000 job losses, and is calling for a new policy on inflation targeting to reduce that risk. A little bit of comment here from Jennifer Lee, senior economist at BMO Capital Markets, who is expecting a 0.7% interest rate hike from the Bank of Canada this month. So the next interest rate decision is July 13th. So we're a few days here as a recording of July 10th. Said that the swift and aggressive hikes will for sure cause a significant slowdown in economic growth. So recession topic is definitely hot. It's, many people are talking about it, and the same conversation is happening in the US. As you'll see, this is an article from July 5th from Bloomberg. Recession fears boost treasuries, commodities drop, markets wrap. So just quick comment here. U.S. treasuries rallied as talks of easing tariffs on China imposed by the former administration failed to alleviate recession fears. Commodities from oil to copper remain under pressure as the dollar rose. And the S&P raised, had some strong gains. The market was up this week, but again, the same conversation is happening in the U.S. of a potential recession. And if you notice, definitely I noticed here in Ontario, oil prices did drop this week. That was because the price of a barrel, the WTI, has dropped. And a little bit of verbiage here, a little bit comment from July the 6th. Oil prices, experts predict how low they could go amid a recession. So as you can see, so many topics, so many comments on a recession that it can't be ignored, to say the least. The recent tumble in oil prices amid fears of a global recession begs the question, how low could go if world economies do, in fact, contradict? Predictions vary. So again, oil prices did come down this week. We'll see how long that lasts. Do they continue down? Do they steady? Or do they march back up? Kind of heard both, so let's see what actually happens here. And this is an article again from July the 6th. So this is a bit about the Fed sees more restricted rates possible if inflation persists. So we're in this cycle right now because inflation has become out of control, and policymakers, central banks, Bank of Canada is doing everything they believe is possible, and one of their main tools is raising interest rates. So that's why they're doing this. And They will continue to do this until they can tame inflation. And this article, this verbiage really touches on that. So policy makers increased interest rates by 75 basis points last month and backed hiking them at their next meeting in July by either 50 or 75 basis points. And this was according to minutes that were released this week for the Federal Open Markets Committee, June 14 and 15 meeting minutes. They viewed maintaining the bank's credibility to control inflation as crucial. Last year, they kept saying, hey, it's transitory, don't worry about it, things are going to be okay. In November 2021, they finally said, hey, we made a mistake, and now obviously we're in this position, and now they're playing catch up. So, a lot of that hasn't, not very well for the central banks, and they're obviously in a tough position. As simultaneously in Canada, what's going on with the jobs, the labor force? I just want to quickly touch up on this. If you work obviously for a company and you're looking for another opportunity or at your current place of business. So Canada's jobless rate hits record low on labor force exodus. So why I want to show you this, that if you are looking for a raise, looking for your next move, or looking for another job, there's a lot of opportunities there. And you can get that, additional monies because of obviously inflation, and you can ask for more because there's less people in the market, so there's more jobs open. So just want to quickly touch on this. Canada's job market shows signs of extreme tightening, with the unemployment rate falling to a record low, wage gains accelerating, and large number of workers dropping out of the labor force. This number is very deceiving, and I'll tell you why. It's the lowest that the number, look, we'll see here. The shrinking workforce pushed the unemployment rate to 4.9%, a low going back to 1976. But the drop appears to reflect the voluntary exit of workers from the labor force, was contracted by nearly 100,000, the biggest 1 month decline on the record outside of the pandemic. Reflecting the dearth of workers, the average hourly wage rate shot up 5.2% from a year ago, an acceleration from 3.9% in May. That too is the fastest increase in record dating back to 1997. The low unemployment rate suggests that the labor force is extremely tight. The imbalance between demand and supply of jobs is a primary reason why the Bank of Canada is tightening monetary policy so aggressively, with markets pricing an additional 75 basis point hike interest rate in this upcoming week. So, if you're looking for a job or you're currently in a position looking for that next opportunity, looking for a raise, now is the perfect time to ask for it or look for that job where you can get that raise, because the labor force market is tight and obviously there's opportunities. But again, just keep in mind this talk of a recession. We don't know if it's going to happen. The data suggests most likely it will. So you definitely want to prepare for that. And now let's coming back to home prices, home sales. What are we seeing here? I want to quickly touch up on two articles here, one on Toronto, one on Vancouver. This is from the Canadian Press on July the 5th. Vancouver's June home sales dropped 35% from last year and 16% from May. And this is from the board, the Greater Vancouver Board. So I'm going to put this article in the description. Definitely read up. Let me go into a little bit more detail about here for the one in Toronto, because it's the same thing that's happening throughout the country. So Toronto home sales down 41% from June 2021, and this is from the Real Estate Board. This is an article from July the 6th. So Toronto, June sales of Toronto homes fell by roughly 41% compared with the same month last year, as higher borrowing costs weighed on the market, the region's Real Estate Board said on Wednesday. About 6,400 homes changed hands last month. That's down from 11,000 during the prior June. This is from the Toronto Regional Real Estate Board. While the board attributed some of the decrease between May and June to seasonal trends, it said the figure and year-over-year sales suggests the current cooler market conditions will persist. Home sales have been impacted by both the affordability challenge presented by mortgage rate hikes and the psychological effect wherein home buyers can afford higher borrowing costs, have put their decision on hold to see where home prices end up. That's a natural reaction. When you see prices dropping, you're like, let me just see what's the lowest point. So obviously looking for that opportunity. Expect current market conditions to remain in place during the slower summer months. Cringer's prediction includes as several of the country's biggest housing markets, so Vancouver, Toronto, Calgary, have eased in recent months. So as what I was sharing, this trend is across the board, across the country. Interest rates will do that. Interest rate hikes will do that. Remember, I'm going to say this again. I've said this multiple times. As interest rates go up, financial asset prices adjust, correct, come down, and they go into more their median, what is expected and what's normal. and you'll continue to see this. So this is what I want to bring you this week. It definitely been a crazy week, and I'm expecting sure this upcoming week with the interest rate hike from the Bank of Canada will be interesting. So three things I wanted you to take away. There's definitely a lot of chatter about a recession, so we'll see obviously how it plays out. Maybe we're already in a recession, and we'll see that data obviously down the road. And like I shared, when inflation becomes 5% or greater, most likely, a recession does follow to tame that inflation. Second, we're obviously seeing inflation. We want to see where inflation, goes from here. If inflation has peaked, the central banks could slow down, but again, time will tell. And the third thing is home prices and sales. Home prices obviously are going to be first to see, as we're seeing here in Vancouver and the data for Toronto. So definitely be on the lookout how that goes, and this is going to affect home prices as well. So I hope you appreciated this video. Any comments, any likes, guys, any questions, always appreciated. I would love to hear from you, and I hope you have a great rest of your week and day. Thank you so much for taking the time.